Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And anyway, just want to do a couple of videos, JPAL, Community Bank, and lots to dive into today. So anyway, let's get into the New York Community Bank Corp has announced a $1 billion capital rise. Of course, led by Steve Mnuchin, former Secretary of Treasury. It's basically an unofficial bank bailout. That's what this is. And this goes back to what the Fed said. They talked about when Jerome Powell was saying that we're going to see some small bank failures, but it's nothing. They're manipulating the psychology of the market so these things don't, because they know more bank failures are coming. They even have said it. They expect a couple of banks fails, but not much. But obviously this is crony capitalism. Get someone used to work for the Treasury. They end up going up and they're buying up the banks and the assets. But this is not where I think it's going to really spook the markets. Isn't a small bank, but the next one, I don't know if this is going to happen just yet, but maybe next year or the year after is when a Wells Fargo or a PNC, one of the big banks, when they fail. So they're basically, it's weird. Bank failures do not matter anymore. And the market was up. So anyway, and then Jerome Powell, the Fed still expects rate cuts. I think the 400 down day yesterday got him to relent a little bit. He likes to pull a Volcker until the market goes the other way. So, and I was actually listening to a podcast. I wasn't sure if this is true. Maybe someone in the comments can verify me, because I tried to find a quick article to cite where the Fed said it's going to up its inflation target instead of 2% to 2.5% or something, but I couldn't verify it, so I'm not going to talk about it. But I think that probably is going to happen this year, but we don't even need that. The Jerome Powell said expect rate cuts this year, and that's the thing. This is why inflation, one of my things has defeated the Fed. Because when it comes to defeating inflation, that requires crashing the housing market, crashing the stock market. Now, that will crash in a couple of years. But in order to defeat it and defeat the psychology, you have to do what Volcker did. Crash the markets. And he was willing to do that. And anytime push comes to shove, even just one down day, the Fed will not let it crash. So it's an election year, so they're going to juice up the markets. But the thing is, at one point, we are going to see, and within the next year or so, we're going to see a point where it's crash the markets or crash the markets a little less, but still crash it with inflation. And I will give you one example. Right now, today's economic data, the economic data is getting worse. ADP employment. Consensus was 150,000, only 140,000 jobs created. That's if any, if you want to believe the numbers. But going by officially, so that is less than expected. That's a bad reading. JOLTS, job openings, expected 8.9 million, 8.8 million. Another bad reading, less than. And then the RCM TIP economic index. The consensus was 45.2, which is still a contraction. But what was it? Yeah, 43.5. So less than expected. So, and then wholesale inventories, which the consensus was down 1%, that was down 3%. So the inventories are starting to liquidate or even being written off. So the economy, this is very bad data. And one thing I also wanted to point out, just about the mainstream. They talk about mortgage rates. Mortgage rates now are still at 7%. Remember last year when we were promised lower rates? They were saying, "Oh, next year you'll be able to refinance. Rates will be much lower." Yeah, well, yeah, still here. So, uh, yeah. So anyway, that's all very poor economic data. If this is any indication. Now, of course, uh, job numbers do come out on Monday, as I said or on Friday, as I said in previous videos. I've seen poor ADP reports and good job numbers, so don't think this is any leading indicator. In terms of the markets today, stocks were up, but the thing is, they went up a lot, but they ticked lower uh, later in the day. So not a good day for stocks. Gold was up a lot, and it says gold extends. This is CNBC. I was looking at gold extends record run as rate cuts bets began ground, and this is CNBC. I'm reading, and yeah, they said it gained 0.8%, which I'm not exactly sure how many points. I remember, well, I checked the price. It was up $14. So I have to say, this is a healthy move because normally if there's a big update, they would engage in some profit taking. But since Friday, there hasn't been a negative day. And I do expect to see some sort of profit taking or correction, but who knows? But I think gold, this is the move I was expecting and I was doing videos about. And I thought, it's going on that point to 2,500 to 2,700 run. I think the miners will go up. The miners did not have that big a day, but today was their biggest day in gains wise compared to the price of gold today. So I think the miners are starting to play a little catch up. And now, do remember though, in my opinion, there's still the job numbers and the inflation numbers. If the job numbers are weak, then I think this run will continue. If the job numbers are strong, then there might be some profit taking. We'll see what happens. Right now, the economic data, where it's Tuesday, Wednesday, any of those days, very poor. Tuesday was very poor, so we will see what happens, but right now, you get to recap real quick. New York Bank, Steve Mnuchin. Now they're doing unofficial bank bailouts where heavy political appointed banks unofficially are buying up the small banks. So New York Community Bank has a raise. Powell expects the rate cuts, and the Fed will reverse course. It's an election year, and I think they will reverse course. He will be Arthur Burns and not Paul Volcker. For those who don't know, Paul Volcker raised rates, destroyed inflation. Arthur Burns was the Fed governor beforehand who let inflation run too hot. So anyway, and gold, this is a strong move. There'll be pullbacks along the way, but yeah, this is a strong move. And if you look at it, poor economic data today, you have inflation slash stagflation. This is a very important, very healthy environment for gold. So anyway, that's all I have to say for that. No comments on the stocks as you know, I'm not really that much of a bull. It could go higher, but in terms of time, this bull market's ending over the next year or so, and it's going to be a 7 to 13 year. If you ask me, it's going to be a multi-decade bear market. And so anyway, that's all I have to say. Gold, healthy move. So anyway, if you like this video, hit that like button, subscribe if you haven't, and I will see you next video.